Okay, guys, so we're going to go ahead and get into that practice midterm. This is, I think I called it practice midterm number 2 or something like that. So it is the exam that we had up there last time as a practice exam. And the exam that we're going to have on Wednesday is going to be very much like this one. And it'll be 30 questions, multiple choice questions. Some of them have A, B, C, D. Some of them will have E, so no more than 4 choices on any one of these. Okay, so let's just go ahead and take a look at this first one, and we've got the revenues versus expenses, and they give us a beginning balance and retained earnings, and they want to know what the ending balance of retained earnings should be. So the way I would set these problems up, if I was taking this test, is I would go ahead and if they told me that there was a beginning balance in retained earnings of $297,000, I would start with that, and then I would go ahead and I would add what? Net income for the period, right? That's been our add. Okay, and I like to go ahead and just do a side calculation for net income just to make sure I'm not mixing things up. So I would take my revenue, which is what, 185,000? Okay, and then I would subtract my expenses, which this problem tells me were 103,700. That gives me a net income, and guys, you want to be armed with your calculators here for the sake of time. I don't want to be waiting for calculations. Huh? 81,000? Okay, good. And so that gives me 81,000 what? 300. Okay. And so I'm going to go ahead and I'm going to add the 81,300 for my net income. Any other things I have to worry about here? Good. I'm going to subtract the dividend. That comes out of my retained earnings, right? 18,000. And when I do I get this choice D, 360,300? Yes. Okay. Okay, so that's a pretty easy question, right? Okay, we're going to hover around retained earnings here for a while and practice with this a couple times. Now this question, I'll probably give you one like this, although looking at it now, it's a little annoying. But anyway, what happens? They want to know which of the following entries would not be made when I'm doing my closing entries. And a lot of the questions in the test bank have this annoying habit of closing revenue separately from expenses. I mean, it's not necessary, and I showed you last time how we could all do it in one big entry, okay? But they go ahead and they debit revenue for $75,000 to close that. They're going to credit what? Well, yes, we would credit the expenses to close them. Who said that? You're right, but that's not how they contemplated the way they set this problem up, and that they close the revenues separately from the income statement. That's not how I do it. I like to debit my revenues to close them, credit my expenditures to close them. Difference goes to the income summary, and I can see the net income right there, right? But they don't do it. They're not contemplating that in this question, okay? They're expecting that you would close them separately. So you would debit income summary for, what's my expenses? 63,000. How much are my expenses? 62,000. Okay, and credit what? Credit the expenses for 62,000. Okay, which I find that whole thing a little bit annoying. And the difference here is what? 13,000. Okay, and so then what they're thinking is, okay, since you have more credits in the income summary than debits right now, right? There's my debits, there's my income summary. It's a $13,000 difference that I would debit income summary for 13,000 and credit retained earnings, right? For 13,000. Then what? I have a dividend here I have to deal with. Okay. Now, of course, during the year they would have done what? debited dividends for the dividends and credited cash, right, for any dividends that they're going to pay. Okay, but then at the end of the year, if I want to close the dividend account, I have to close it each year, don't I? Yeah. I'm going to debit retained earnings 8,000 and credit the dividend account to close that out for 8,000. And so now we go through these journal entries. Did we debit income summary, credit retained earnings? We did do that. We debited revenue and credited the income summary right there to close the revenue accounts. We debited income summary and credited the expense accounts to close them. We debited retained earnings and credited dividend to close that. The entry that you would not make is debit income summary, credit revenue. It's the opposite, right? Right? Okay. Question? Okay, good. Let's go ahead then. And let's take a look at this next one. And they say after the closing entries, what will be the balance in retained earnings? Now look, we don't have to go through all the closing entries for that. We just analyze retained earnings. And they tell me that retained earnings had a beginning balance here of what? 130,000. We're just going to do like we did before. Our add is going to be net income. If our add is net income, we just pick that up. 42,500. That's my net income. Okay. Then what? What do I do with these dividends? That's the subtract is the dividend of 12,000. And do I come to this 160,300? Yeah. 500, I mean. Thank you. Right? Okay. Okay, good. Coming down, and I think I started at the end is the way I must have picked these questions from the test bank. I must have been in chapter 4 when I was doing this, or I mean chapter 3 where we went through closing entries. So I probably went backwards. So if you're wondering where's some of the other things that we talked about, those will come up. But right now we're hovering around retained earnings. And they want to know what is the correct entry to close the expenses. Well, that's a piece of cake for us now, which is to do what? Debit income summary and credit the expense accounts to close them. Right? Right? Or are you guys looking at that like you just saw an alien pop out of the screen here? Right? Okay. Okay, I don't have to do the whole set of closing entries to show you that one. That's all they asked for. The rest of these are obviously not correct. Okay, good. Let's take a look at this one. Company paid dividend of $35,000 in cash. The entry to close the dividend account. Again, during the year, I debit dividend. Just showing you what they're doing during the year. $35,000. Credit what? Credit cash. No, as I pay a dividend, I'm crediting the cash. I'm paying in cash. There's other types of dividends that can be given. You could give a property dividend, which case I'd credit property, or I could give, if I'm Apple, I could give iPads out. I don't think they would, but I could give iPads out or iPhones out as my dividend, in which case I'd credit inventory, right? But you got to credit some asset if you're paying them a dividend, right? So we're crediting the cash here. And then at the end of the year, we do what? We debit the retained earnings because we're paying that dividend out of our retained earnings, and we credit cash, right? Now, if you're still sitting there saying, how did he know to debit that? How did he know to credit that? We have a problem. Okay, we got to know that by now, right? Okay. Huh? I mean, not cash. Thank you. What am I doing? I'm crediting the dividend to close that. Sorry. Crediting the dividend to close that? Sorry, guys. Just trying to close the dividend account. I close that out to retain earnings. Close that out to retain earnings. Okay. Okay. Taking a look. Oh, there's got to be something wrong with this problem. I cannot make this problem work. Okay, there's something that's not the right answer. Okay, whoever was doing this question didn't know what they were doing. Okay, And sometimes, you know, they mark the wrong answer, they make a mistake. I have a textbook that I use for governmental accounting in which, you know, they put my name in the front of it because of all the mistakes I've sent to them that they have in that book. So textbooks make mistakes, and it's not the author isn't sitting there writing these questions. They farm it out to graduate students and stuff like that, and they, you know, come home with a hangover or something, I guess, and try to do these, okay? So let's just look at this, though. So we have what they want us to tell them is what will be posted to retain earnings in the process of closing, okay? And so what are we going to do? We're going to have our revenues. How much are our revenues? 29,000. And then we're going to take our expenses. And our expenses are going to be what, 3,600 for rent? I guess I'll write them. Rent expense, 3,600. What else? Salaries. Salaries. 30, what do you say, 7,200? Okay. What else? We got insurance. Thank you. Insurance expense is 920, you say? Okay. Anything else? Anything else? Dividends are not an expense. Okay. So they're asking me here, what amount will be posted to retain earnings in the process of closing what? The income summary account, and dividends don't run through income summary, right? Come straight out of retained earnings. Okay. So anything else here? Well, do I have to close my expense accounts? I have to close my expense accounts. I have to close depreciation expense, don't I? Right. So I pick up depreciation expense, and that's what, 500 bucks? Okay. I don't close accumulated depreciation. Accumulated depreciation rolls forward period after period, right? Remember, we've done that a couple times now. And so accumulated depreciation is not a part of the closing entry. So when I take 29,000 and I subtract all these, I get 16,780 is my net income. Okay, so the answer here is 16,780. You don't close accumulated depreciation. I don't know what whoever did this question was thinking. They wanted to close accumulated depreciation. You don't close that account. Accumulated depreciation is carried forward on the balance sheet. It's a contra asset account, isn't it? Hello? You do not close accumulated depreciation, so there would be no closing to accumulated depreciation. What would happen if the accumulated depreciation started the year with 1,500, it would end the year with what? 2,000 in it, wouldn't it? Okay, we would have debited depreciation expense, credited accumulated depreciation for $500, and accumulated depreciation just rolls forward period after period after period until we finally sell the asset, right? Okay. Okay, good. Temporary accounts. Temporary accounts, guys, I don't know if I mentioned this, are income statement accounts. Income statement, easy for me to write. Why do they call them temporary accounts? Good, because they're temporary, because they get closed at the end of the year usually, or end of month, whatever. We're going to close them out, aren't we? We don't typically close them at the end of the month because we want to track them year by year, okay, unless we wanted to sit there and have to add them all up. But I'd say it's better to say by the end of the year we will close those. So they're temporary, right? Okay, so you look, and temporary accounts will include all of the following, and the real question is, you know, which of these will I leave open? And the answer is what? Prepaid rent is an asset on the balance sheet, isn't it? Okay, and I probably shouldn't have said income statement because dividends get closed also, even though they're not reported on the income statement. They report on the statement of retained earnings, and what income summary gets closed out to retained earnings. So these are also temporary. Any account that zeroes out by the end of the year is going to be defined as a temporary account. Permanent accounts appear where? On the balance sheet. They carry forward from period to period. So there we go. Accumulated depreciation is a permanent account. That's why I'm saying they shouldn't have tried to include that in the closing entries to the income summary. Income summary is temporary. How can you close depreciation accumulated depreciation, to the income summary? Prepaid insurance is going to be on the balance sheet. Unearned revenue is a liability, right? On the balance sheet. Accounts receivables on the balance sheet. Depreciation expense, we close that, right? That's why we close that one to retained earnings and not the accumulated depreciation. Okay. Okay, good. How about this one? Use the following information to come up with the current assets. How about cash? Is cash a current asset? That's about the most current asset we got, right? So cash. How about accounts receivable? Yeah, we're going to probably collect on those in a year, probably 30 days on accounts receivable, right? How about prepaid insurance? Yeah, we typically call prepaid insurance current. You say, well, what if it's a 2-year policy? We don't get that fussy about it, right? Okay, and so it's usually a 1-year policy anyway, and so we're going to go ahead and just lump that in with the current assets. How about equipment? Current asset? Okay, what? Equipment is something that we're probably going to have for a while, right? Buy a piece of machinery, you're expecting it's going to last you 5 years or something like that, right? Okay, so equipment typically is not. The accumulated depreciation on the equipment is a contra asset. To that, it is not. Land will probably be around forever, right? Okay, so what's the answer here? 23 plus 16 plus 6,600, right? Okay. Okay, good. Let's see if we can come up here. They give us this, and they want the current ratio. So current ratio is going to be our current assets divided by what? Current liabilities. We already know that the current asset is 45,600, isn't it? Okay, and then we're going to have to simply divide that by whatever we figure out here to be current liabilities. So let's go up and take a look at our current liabilities here. How about accounts payable? Accounts payable is a current liability. So I'm just going to write the current liabilities in here so I can add them up. Oops, not 17 million. See, when you work for the government, you just keep drawing zeros. You just automatically start putting zeros after every number. How about interest payable? Interest payable, assuming, and they could have been a little bit more specific about that, to be honest with you, in this problem. You'd have to go ahead and assume that it is. Some interest could be, due longer term, but usually interest, we consider that to be current. Okay. How about the unearned revenue? Yeah, pretty much. We go ahead and we consider that current, so we add that in 5,000. How about this long-term note? Obviously not, right? And common stock and retained earnings we know aren't liabilities. They are stockholders' equity, right? So we add those together. What do we get here? 17, 24, 19, 4, and 5 is what? 23, 4? 24, 4? Okay. And do we get a ratio there? 45,600 divided by 24,400? 1.86, you say?
Well, 1.87 if you round.
Okay, 1.86, 1.87 if you round. Do we have any choices there that fall into that ballpark? There we go, 1.87, right? Notice, guys, there's no problems on the exam where I'm not here to test rounding. Okay, so I have a class right now where they're getting all bound up in the rounding. They what's up? Oh, I got this one. I got this. Guys, there's a clear answer who steps up and says, "Hello, I'm the right answer," regardless of rounding. Okay, so don't get hung up on rounding. Okay. Okay, good. Let's take a look. Company made no adjusting entry. Where'd it go? Company made no adjusting entry, number 11 here. Company made no adjusting entry for accrued but unpaid wages of $28,000. Who wants to give me the journal entry for the accrued but unpaid wages? Got to recognize those at end year of the end, right? End of the year. I'm paying my employees on Friday, and they work Monday, Tuesday, Wednesday, Thursday. So what do you want me to do on Thursday if Thursday is the last day of the year? They work Monday, Tuesday, Wednesday, Thursday. They're making $7,000 a day. Don't look it up. There's nothing to look up. Huh? They work Monday, Tuesday, Wednesday, Thursday. Thursday is 12/31. And then January 1st, I'm going to go to their house and wake them up and give them their money while they're still hungover, right? Okay, so there's Friday the 1st. I'm going to go to their house and pay them. So what do I have to do on Thursday the 31st? Huh? Credit salaries payable, good. For what are we saying, 28,000? What do you want me to debit? Cash? I'm going to debit cash when I owe somebody money? I'm going to debit salary expense for 28,000 bucks, right? Okay, I'll pay him cash I'll credit cash when I pay him. There's no debiting cash. It's not going to happen here. Okay, and so what happens? If I don't do this, my expenses are going to be what? Understated, aren't they? And if my expenses are understated, then my net income is going to be what? Overstated, right? Right? I mean, let's say I had revenue of 28,000 and I showed expenses of 0 because I didn't do this. My net income is going to be what? 28,000 when my net income should be 0 because I had people that worked for me for 4 days at $7,000 a pop, whatever, right? Okay, number 12, unearned revenue are generally, and we've said that a number of times, it's what? It's a liability, right? Prepaid expenses are an asset. For example, my prepaid rent, my prepaid insurance, right? Okay. A company's formal promise to pay is a note payable. Do you think? Okay, I mean that question's like, can you read? Okay. Okay, good. Number 14, Wiley purchased 7,000 worth of supplies and paid cash immediately. What should I do? Debit supplies, credit cash, okay? And notice here, guys, we're starting to get into that very first example, that in-class, when I say very first, that in-class example that we went through 52 times. Okay, so again, mastering that becomes a key part of doing well in this class and on that exam and on this exam. Okay. J. Brown Consulting paid $500 cash for utilities for the current month. Okay, if you do that, you have to do what? Debit your utility expense, credit cash. Number 16, on July 1st, Plum Company paid $7,500 cash for management services to be performed over a 2-year period. Plum follows a policy of recording all prepaid expenses to asset accounts at the time of cash payment. I think they'd be a little remiss if they didn't do that, because then they'd have to figure out something to do later, which making their job harder than simply going to their general ledger software and doing like we did in that example, which would be to debit the prepaid asset, credit the cash, right? Okay, good. Number 17. An account linked with another account has an opposite normal balance and is subtracted from the balance of the related account is called a contra asset. Anybody got a classic example of a contra asset account? I own a piece of equipment. I paid $100,000 for it. It has a 5-year life. I'm going to take $100,000 and I'm going to divide that by how many years? 5 years. That means if I don't have a salvage value, I'm depreciating that asset at how much per year? $20,000 a year. Good. So at the end of year 2, how much is my accumulated depreciation? Well, what journal entry do I make each year for this depreciation? Debit the depreciation expense for $20,000 and credit what? No. I'm going to show an accumulated depreciation account that goes against the equipment. So what do you want me to credit? Hint, hint. Credit accumulated depreciation, $20,000, right? That's for year 1. So the book value of that asset, book value of equipment, it's also known as carrying value, of the equipment is $80,000 at the end of year 1, isn't it? How many more years do I have left to go on that thing? 4 years at how much? $20,000 a year. The whole world can see everything right there from that whole presentation. You paid $100,000 for this equipment. You've used up about 1/5 of it, and you've got about 4/5 of it left to go, don't you? Okay. Okay, good. Then what? What do I do in year? If that's the year 1 entry, what do I do in year 2? What journal entry do I make in year 2? Huh? Credit the accumulated depreciation, $20,000 again? Okay, and so if I was teeing up accumulated depreciation over here, I got $20,000 for year 1. I got $20,000 for year 2, don't I? Okay, so when I report the equipment, how much am I going to put for the equipment? Huh? No, the equipment. Make the balance sheet. Don't use your imagination in accounting. Nothing has happened to the equipment account, so it's still $100,000, right? How much is in the accumulated depreciation account now?
40,000.
Good, 40,000. So now the book value of this asset is how much?
60,000.
Now the book value is 60,000. I got 3 years left to go, 20,000 a year, right? Accumulated depreciation is a contra asset account. Contra means opposite, against. It's basically a Spanish word, contra, against. Okay, so it is against the asset account, isn't it? Accumulated depreciation. Okay. Okay, good. Come over. J. Brown paid $2,500 cash for a 5-year insurance, a 5-month insurance policy, which begins on December 1st. Given the choices below, Determine the journal entry that J. Brown Consulting will make to record this transaction. So we paid $2,500 cash for what?
Insurance.
For a prepaid insurance asset, right? Cash goes down because we paid cash. The prepaid asset insurance goes up, right? Okay, let me ask you this. 2,500 divided by 5 months. What's that, 500 a month? Okay, so what journal entry should I make on December 31st? I've used up a month of that, haven't I? What journal entry should I make on December 31st? Well, do I still have $2,500 of prepaid insurance? Okay, credit prepaid insurance. So I'm just going to write it here. Prepaid insurance, sir. You say for 500? Okay, what do you want to debit? Good. Insurance expense. The insurance has expired, hasn't it? For what is it? 500? Right? Okay. Okay, good. The total amount of depreciation recognized against an asset over the entire time the asset has been owned is referred to as accumulated depreciation, you think? Right? It's the amount that's built up in there. I think I'm going to need to get some harder questions for this test. This stuff's too easy. I don't know what. I must have been in a good mood when I wrote this question, which is highly unusual for me to be in a good mood. I don't know what was going on. Did the Raiders win Sunday? That must be what happened. Okay, what's happening here? ABC Catering received $800 from a customer for catering services to be provided next month. This is unearned revenue, isn't it?
Yeah.
Just like that DJ work we were going to do. The guy gave us some money a year in advance or whatever. What was it, $10,000 a month? 21. The company paid $100,000 cash in dividends to J. Smith, the owner. Which of the following journal entries will J. Limo Services, Inc. make to record this transaction? Debit, dividend, credit, cash, right?
Yep.
What do we do at the end of the year for this one to close the dividend account? We want to close that dividend account. We're stuck with $100 in the dividend account. We want it to be zero at the end of the year, don't we? Clinging to your backpack. Oh, okay. I'm thinking, no, keep the accounting away from me. Okay, what is it? To close this?
Yeah, retained earnings.
Debit retained earnings and credit the dividend, right? At the end of the year
Yeah.
for 100, right? To close it. Okay, so dividend, guys, again, the way to think of it is like an expense, but we don't report it on the income statement, right? It's in a statement of retained earnings, but it still gets closed out to retained earnings, right? Question? Okay. Okay, so they're paying their dividend to an owner. Okay. Okay, good. 22. Able Graphics receives a $400 utility bill for the current month's electricity. It is not due until the end of the next month when they intend to pay it. Which of the following general journal entries will Able Graphics make to record this transaction? And what happens? Still a expense because we have already used that electricity. It's expired, but just because we don't pay in cash doesn't mean we don't take the expense. We're going to set up a payable. Do you have a bill? A utility bill? A payable? A liability? Okay. Okay, good. Stop me if you want to savor any of these because I'm not thinking we have to stop too long on them if they're that straightforward. HH Consulting and Design provided $800 of construction work and $100 of design work to the same client. It billed the client for the total amount and is expecting to collect from them next month. So when we build the client, we know we're going to have what? Accounts receivable. And since we've already provided the service, we know we're going to have revenue, right? Okay, so we just look down here. And let's see, there's the debit to accounts receivable. That was pretty easy because what? There was only one that even had accounts receivable in it, and then the other two were two different line items, different types of revenue, but still revenue, both of them, right? Okay. Okay, good. On January 1st, a company purchased a 5-year insurance policy for $1,800 with coverage starting immediately. If the purchase was recorded in a prepaid insurance account and the company records adjustments only at year end, the adjusting entry at the end of the year, well, first off, if it's $1,800, and how long is the policy? 5 years, then we're talking what? $360 a year on this thing. And so what's happened? What's the journal entry to purchase the policy? Not asked in this question. What would be the journal entry to purchase the policy? Credit cash, good for what? 1800. What is it? 1800. Okay, good. And debit what? Prepaid insurance. I have future economic benefit, don't I? For 1800. And so I go ahead and then I'm going to take 360 of that a month. A year. Will 360 a year expire?
Yeah.
Huh?
Yeah.
360 a year is expiring, isn't it? So I'm going to debit insurance expense for how much? 360 and credit what? Credit the prepaid because the what? The asset is expiring, isn't it? I'll just keep doing that for, what is it, 5 years? For 5 years? It's kind of a long insurance policy, but whatever. Right? Yeah, debit on the left, credit on the right. I debited the insurance expense. Yeah, I debited the insurance expense because 360 of that has expired, right? Credit to prepaid. What should be the balance in the insurance account now? Who wants to set that up? My prepaid. There's my debit for what? 1800? And then I credit it for what? 360. So there's 14 something? 1440. I could ask you that same exact question on the test and just ask you what's the balance in the prepaid, right? That's all I'll change. And of course the choices. And of course the journal entry, because this one was asking for the journal entry, right? So I'd have to change all the responses. But I could keep the facts the same and then just give you different choices as to what's left in the prepaid. Okay? Okay, good. Number 5, unearned revenue is a liability. We already asked you that. Which of the following assets is not depreciated? Land. You don't depreciate land. Now look, some people will say, "Well, I saw a piece of land fall off the edge of a mountain, on the internet or something." Well, yeah, okay. That then you would just write it off all at once when it falls off the edge of the mountain, but you don't depreciate land, right? Okay. Okay, good. On May 1st, Sellers Marketing Company received $1,500 from Franco Marcielli for marketing campaign for a marketing campaign effective May 1st this year to April 30th of the following year. Cash received and was recorded as an unearned fee at year end on December 31st. 1,000 of the fees have been earned. What should we do? Well, since 1,000 has been earned, then I'm going to go ahead and I'm going to do what? Debit the unearned and credit what? Credit the earned revenue, right? I mean, that problem set itself up as though we were going to have to make a calculation. I mean, the only thing annoying about that was we got all ready, we grabbed our calculator, and then the stupid thing just told us that they had earned 1,000. Okay, well, if that's the case, then I just deal with 1,000, right? Okay. A company pays each. Yes, sir.
I just had a quick question. Going back a little bit, so I know that unearned revenue is a liability, but I don't understand what exactly makes it a liability. Why is it?
Well, let's go. You understand that accounts payable is a liability, right, for my utility bill?
Just asking because that's something.
Hang on. Don't take the information. Stay on the range, cowboy. Let me break it down for you. Okay. So what happens? We're sitting here and we know that utilities is a liability, right? Okay. Because what? Because we used up the service, didn't we? What's going to happen if we don't pay the light bill? They'll cut off the lights, but eventually they'll send somebody to start to collect that money from us, right? I mean, they'll turn off the lights. They're thinking that'll motivate us to pay. But if that doesn't work, they're going to send somebody to come over and pay us, right? I mean, to take that money from us somehow. Okay. All right. If somebody gives you money and says, give me a service, and you don't give them the service, what's going to happen? Okay, they're going to compel you to pay. They may come with they may come with an accountant like, comes and says, my boss says, I'm his accountant. He says you owe us some money. Where is it, right? Okay, and you're going to be compelled to pay, right? Okay, and so what happens? It works the same way. If you do not perform based on what you had agreed to do, that's a liability. That's a liability, isn't it? Okay, so unearned revenue is just like the light bill. Hey, you agreed that you'll have this light wired up to your house, and when you flip the switch, they're going to start running the meter, and you're going to pay for whatever that is, the expense that you incur, right? If a guy gives you some money, he's agreed that you're going to come and do some work for him. You're liable to do that. You really have a bill. If you don't, you got to return him the money, right? I mean, it's not slavery. He's not going to come to your house and say, hey, get out there and do the work, but you'd have to at least return him the money at that point, right? So it's clearly falling into the category of liability when you think about it that way, I think. Okay? Okay, good. All right. Now, sometimes someone could sue you if it's a specific performance, and they could sue you for more than what they agreed that they would pay you. They could start to get damages. Like, let's say you're a great singer, and they go through all kinds of expense and everything. This is beyond the scope of accounting. This is getting more into business law. But they go through great expense to set it up for the lighting and this, that, and the other. And, they incur all kinds of expenses. And then you don't show up to the concert. Then they could say, hey, not only do you have to give us the advance back that you gave you, but we're suing you for damages for all the things that now you would have to account for those damages ahead of time, but if you were to, lose that case, then there'd be an expectation that you'd pay that person, right? But that's beyond the scope of what we're talking about here. Which of the following, again? Oh, I was going to say. This thing way too easy. Okay, a company pays its 2 office employees $100 per day, 5 days a week that begin on Monday. If the monthly accounting period ends on Tuesday and the employees work both Monday and Tuesday, what should we do? So we've got what? We've got 2 employees. They work what? Monday, Tuesday, and we're paying them how much? $100 a day, so that's $400 of expense that we have for those last 2 days of the month or the year, whatever it was, right? Okay, so what do? Debit the salary expense, credit the salaries payable, because we got that work for those 2 days. The end of the month has come. We want to record the expense even though we're not going to pay them until Friday, right? How much are we going to pay them on Friday? How much? How much should we pay them on Friday? 5 days. Ends on Friday. 2 employees, $100 a day. How many employees? 2 employees. That's $200 a day for how many days? For 5 days, right? So we're going to owe them $1,000. Okay, so what journal entry do you want to make on Friday when we finally pay these guys? I mean, pretend you're one of these employees. How much money do you want from this guy?
Debit salary expense 1,000. Salaries payable 1,000.
Okay, well, no. Are we going to pay him any cash? If you were these guys, would you be sitting there saying, "Hey, Bob, let's go get our $1,000"? Would you be saying that to the guy? No, you work for 5 days for this fool. It's Friday, and you're going to walk out of there saying, "Yeah, okay, you don't have to pay me." You're going to be standing there going, "For the cash, aren't you?" Okay, I'm not leaving here until I get paid. Okay, so we obviously have to credit cash, don't we? For 1,000? Okay, all right, now what? Well, are we liquidating that payable now? So we're going to debit salaries payable, although there will be an expense, but salaries payable for what? For the 400. That's now I'm paying them on Friday for Monday and Tuesday, right? What else do I have to debit or credit to make this journal entry balance? Debit 600, right? Which account? Why salaries payable? Salary expense for 600. Salary expense for 600. Where'd I get that 600? Other than to make the journal entry balance. How many employees? 2. How much do I pay them a day? 100 a day. How many days? Wednesday, Thursday, Friday. 3 days. Is that 600? I mean, with these salaries question, guys, you get a little confused. Just pretend it's your money that you're getting paid. You'd be sitting there and you say, "Well, look, you still owe me 600 for the last 3 days." I mean, you'd be all over that, wouldn't you? Okay, so, so it's working the same way here because we're just trying to take our expenses in the correct month, aren't we? Okay. Question? Okay, number 29. Let's see. They say that question is hard. Oh, come on. I'm usually not supposed to include that stuff in there. That is not a hard question. They think they're playing with children. That's not hard. No, tricky.
Why are you not supposed to include that information?
It's kind of like, the Wizard of Oz when he was going, "You have a." Did you see that movie, The Wizard of Oz? And everybody was going, "Oh." If I start to show you which ones are easy, which ones are hard, you're like, "Pfft." Right? I can't be the wizard anymore if I tell you whether it's hard or not.
Well, that one's hard if you do all the entries for it. But if you just
This one is hard if you don't study, okay? If you don't study at all, you just kind of come in, there's no way you're, going to work your way through this one, right? Okay? Okay. A company pays employee what? $4,000 each Friday, which amounts to $800 per day for 5-day work week. So what is it? 800 per day? For a 5-day work week? That's not bad. So that's what, 4,000? That's 4,000, right? For the 5-day work week? Okay. And that begins on Monday. If the monthly accounting period ends on Thursday, we're only going to pay the person what? Monday, Tuesday, Wednesday, Thursday. We're only paying for 4 days. And so what we're going to still pay him for the 5, but the salaries that will remain unpaid at the end of the accounting period, which ends on Thursday, is the 800 times what? Times the 4 days. So how much? What's the journal entry on Friday? What's the journal entry on Friday when we pay the guy? Got it. Credit cash. Good for what? 4,000. Good. You're getting good at that. Get that cash down. The rest will free your mind. The rest of your body will follow as you sit here and you figure out now what you're supposed to do with the rest of this. Okay. Now what? Salary expense. For how much? No, only for 800. I'm assuming, guys, I guess I should have told you that. I'm assuming that we would have debited salary expense for what? 3,200 and credited the payable. Sal payable for 3,200, right? Okay. And so now I'm just paying off that payable, right? So I debit the salary payable. 3,200. Accounting is not that hard. It's repetition again and again of the same idea over and over again. And then all you do is you kind of, act like you really know something. It's really, really hard how to do, and you kind of, look like this, and you get to make some money. It's great. Yes, sir.
We debited salary expense and salary payable and credited cash.
Down there when we paid them, yeah. We debited the payable for the 3,200. That was liquidating this payable right here, right? Right? And then we have to take the expense for the 1 day, the $800. Yes. Well, the guy wants his money on Friday for the 5 days he worked. He won't leave. The guy, he doesn't leave. We keep thinking he'll leave, and we go in the back room and we come back, and he's still standing there going, "I need 4,000." And so finally we give up and we say, "Okay, God, these people, they want to be paid for their work. Here you go. Here's $4,000, so we got to credit cash, don't we?" 3,200 that was paying him off what he had already earned, and 800 is paying him for what he earned that day, right? And we took it on that day because presumably that was the first day of the new month. So how much is this guy making a year? How many weeks in a year? Times 52. How much is he making? 208,000. That's not bad. I know some people that are accountants that would weep openly if you told them that's how much they're making. Like partners at CPA firms. I have a friend who works for a CPA firm, Price Waterhouse. He's pulling down about 400,000 a year. He does the taxes for high wealth individuals. He pulls down about 400,000 a year. So now he's getting ready to retire and he's practicing welding. I'm going to go back to be a welder. I'm thinking to myself, that's not going to last. He's not going to weld. Come on, Alfred. I'll just see you at the bar. Don't worry about it. Okay. Huh?
I said I'll take the $100 an hour each.
Oh, it's more than 100 an hour.
No, for that example, that's what it is.
Oh, for that example, yeah, that's 2,080 hours in a work year, in a work week. Again, Alfred would quit if you told him he'd get to the welding if you told him you were going to pay him $100 an hour. Okay. All right. How about this one? The adjusting entry records salaries earned due to employees for service provided but unpaid at the end of the accounting period. Debit the expense and what? Credit the salaries payable. We definitely hit that salary stuff at the end of this test, didn't we? Question?
Are you gonna have this posted on Canvas tonight?
Yeah, I can get it up on Canvas. I mean, we're probably talking, I'd say more tomorrow morning, but I'll put it up there tonight. But don't look for it like at 8 o'clock or something, because I got to get home first of all, and then, I got to get it processed and then loaded up onto Eilers. So it'll definitely be there by tomorrow morning. So, this exact test will be up there. Well, it's already up there on Canvas. Well, I think you mean the lecture. What we're talking right now. I'm recording this. Yeah, so I'll just go ahead and it takes a little while to process and stuff, and I got to get home and yada, and I got to stop and I have to make copies of some people's exams for Wednesday. And so by the time I get home, it's usually like 8 o'clock or something. Adjusting entry and closing entry. Okay. Adjusting entry is basically what we've been doing when we come to the end of the year or end of the month and we're saying, hey, we've accrued some salaries or we've incurred some expenses. We look and we see that we purchased supplies. So we debited supplies for 1,000. Let's say credited cash for 1,000 at the beginning of the year, beginning of the month, and then we look at the end of the month, and there's only 200 supplies left. How many did we use? How many did we use? Huh? 800. Good. So we would debit supplies expense for 800 and credit the supplies account, right? For 800, right? That's an adjusting entry. That's an adjusting entry. So let's say we had no revenue. Our revenue was zero. Why make it a sad story? Let's say our revenue was 1,000. $1 million? Okay, let's say our revenue is 1,000. And let's say we can see that our supplies expense is 800 in this little example. So I have net income of what? $200, right? Okay, but I need those expense accounts and those revenue accounts to be back to zero at the start of the new year. That's the closing entry. That's when I go and I debit revenue for 1,000. I credit my expenses for 800, and I have to credit something, so I credit what? Income summary for 200. So now my expense accounts are all closed, aren't they? They're zero. Okay. And then I'm going to go ahead and do what? Debit income summary for, what is it, 200? 200 and credit retained earnings for 200. Okay. So this and this part were the closing entries.
So every time you close something out, you basically do it with your retained earnings.
Closing is basically bringing my my revenue accounts down to zero, bringing my expense accounts down to zero, and then closing out my income summary to retain earnings, closing out my dividends to retain earnings. So yeah, pretty much it's closing the income statement to the balance sheet essentially. So if you know an accountant that doesn't become a CPA, then around the end of the month they go, oh, I can't do anything, I have closing. That's closing entries. You never hear Alfred say that. You say, hey, Alfred, want to hang out? Yeah, where are we going? I'm sure he worked hard at some point. Not anymore. Not anymore. Huh?
Yeah. So basically, I mean, the reason why we do this when we close is because, for example, when you put expenses, you're crediting it because we're trying to make it go down.
I want it to go back to zero so I can start over again next year.
Yeah.
And frankly, if I didn't do this, I wouldn't. This is how I'm getting my net income to retain earnings. If I didn't, my balance sheet won't balance because I got to get it to retain earnings.
It all ties back to that chart.
The whole thing, this whole class is going to leverage off of that one stupid little example from the very beginning. Year one, year two. If you follow that year one, year two, you should not have any problem in this class. Because after this test, guys, it all becomes a variation on the same stupid little idea of debit this, credit that to make everything balance. Close at the end of the year, roll it over to the balance sheet, start again. You don't even have to lose your hair if you don't want to. Some people can't take it. Their hair just drops out after they look at this stuff long enough.
That happened to Alfred.
No, Alfred's got nice hair. That happened to me. Alfred's got hair of a 15-year-old. It's ridiculous.
Awesome. He's doing it all.
Huh?
Goes to the bars. He's getting 400,000 a year. He's Alfred guy.
Yeah. Yeah, he's a nice guy too. Maybe that's why.
I understand that question. I was rereading it to make sure I fully grasp it. I just wanted to know how come we put 800 under salaries payable? Because isn't it all just an expense?
Who put 800 under salaries payable?
I'm sorry. Salaries payable. Oh, when you put it on under salaries expense or salaries payable.
This part is salaries expense. This part is salaries payable for 3,200. And then when we come over here and we get into the new month, because we want to keep track of this by month or by year or whatever, only 800 was an expense in the new month, right?
Oh, I get it. Sorry.
Yeah. Okay, guys? All right, look, this should be an easy test for you if you study this test. If you study this test, do not walk in here and think that somehow, oh, I got this, and you don't have to study. You should be sleeping with this test under your pillow, okay? And then it'll be an easy test. Yes, sir. Hang on, guys. Skinny green Scantron. The one with 50 questions on the front, 50 questions on the back, even though obviously we're going to only have 30 questions. This one right here. Pencil, calculator, scratch paper, eraser, highlighter if you want. That's it. No notes. Guys, bring your regular calculator. I know you won't cheat, but I've had people that they can't help themselves if I let them use their phone. Okay, so please use your regular calculator. All right, guys. Have a good rest of the evening. Uh-huh. Yeah, let me just stop this real quick.